softening in the market right now that will allow the investor that's, pretty savvy to buy deals at a bigger discount to offset the hike in, the lack of cash flow generated by the hike in interest rates.
Wow. So we have no idea.
Yeah, pretty much.
I guess I want your thoughts. The Fed just raised rates again, 75 basis points, saying there's going to be another hike. We're in a recession, 2 fiscal quarters in a row.
Mm-hmm.
We're down, we're in a recession. Inflation is said to be between 7 and 9%, depending on what poll you read and how you're looking at it and what factors. What do you see is upcoming, or are you using what you learned during that time to kind of shift your marketing and also your disposition process? Because you mentioned the 4 different ways, the 4 different utilizations of those assets that you get under contract or start working with. So does that shift now for you?
Good question, big question. And it's on our minds, constantly here. With the rate hikes that we've been experiencing, it certainly appears that the Fed wants the housing market to go backwards. That's how it appears. And I think what you have right now is a lot of people, and correctly, incorrectly, whatever, but a lot of people are uncertain and they're frozen. So, and when I say people, I mean both people that own homes that normally would have sold, but they're afraid to sell because they maybe had an interest rate of 3 on their mortgage on their primary home. And if they go buy another one, that's going to be, 7 now? I mean, it could be. Mm-hmm. So we have you have some hesitancy there, but I mean, let's face it, we don't have a cure for the housing lack of inventory that we've had as a result of the Great Recession. So during that time, there was a glut of foreclosures, and you had all this inventory as a result of builders basically cranking out starter homes, right? And you had a lot of those builders go under, and you had about a 10-year period where those builders were no longer there. So there's this void in the market and a hesitancy of those builders to crank back up. So they had this lag in housing inventory that never got fixed. And it will now, if things continue how they are, it will never get fixed. So something drastic has to happen, whether it's government intervention and they basically force the issue on cranking out affordable housing by making it so attractive to builders that they can't say no, or technology improves at a pace to where they can now make that type of product with 3D printing or some other type of tech that's going to come out and fix the, at least to a point, fix the housing inventory. But I think I look at how things are now. A lot of real estate investors are like, whoa, pump the brakes here because interest rates are up. I can't find anything to cash flow and so forth. But if your rents are actually keeping up with the incremental increases in interest rates, your cash flow shouldn't be as affected as it normally would in a stagnant rental market. However, it's still a thing, and you have to underwrite deals more carefully, and you have to make lower offers. And I think you're seeing a softening in the market right now that will allow the investor that's, pretty savvy to buy deals at a bigger discount to offset the hike in, the lack of cash flow generated by the hike in interest rates.
Wow. So we have no idea.
Yeah, pretty much.